Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're going to talk about making money through the stock market. I know what you're thinking, but I'm going to give you some tools where you can set it and forget it. That's one way. Or you can do index funds. That's another way. Or you can try to do it individually. We're going to talk about it today because if you have those streams of income, you're going to need investment vehicles to make your money work for you. We're going to talk about it today, and welcome to Foci Optics. Check. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And as you can see, we're on the Stop Struggling Now YouTube channel page. And I want to thank you once again for being here. And please share the video with other people because we're trying to help everybody be a top 10%er. And as you can see, we have a join button over here on the right. And I want to thank you subscribers and supporters of the channel because we now have went across 8,000 subscribers. This is awesome. So I want to thank you for your support. And there's a join button over here on the right. And you can become a member of the channel. And now we have many more members who have joined over here on the button. And we're going to start doing live stream member only. So if you're a member, go to the community tab right here, which you'll see a member only message. And let me know when the best time you want to do the live, whether evening time, a day of the week. Both would be helpful, because then we can maximize how many people may be on that live stream from members only. And you hit the join button over here on the right to become a member. So thank you for your support. Now, we're going to get into what we always talk about here. We talked about the streams of income, the affiliate marketing, the referral marketing, how you can start up for free. We talk about that all the time. Well, what are you going to do when you start making money? You already make money, which is the funny part, but most of you don't think about it because you work at a job and you're going, okay, I live paycheck to paycheck, or I might only have $500, $1,000 left over, and I don't want to put $100, $20, $50 towards something like a stock. But you'll rather go out here and buy a flat screen TV, go out here and buy $200 worth of groceries, which is fine. But you go out here and buy Starbucks coffee, go to McDonald's, go to Burger King, and you're sitting around going to restaurants, going to Friday night and Saturday night parties. You don't think about spending 50, 60, $100. But now let's start thinking about it. Change your mindset, because in order to be a top 10%er, you have to change your mindset. When you sit there and waste years by wasting this money, when you're saying, hey, Friday night, Saturday night, Sunday, happy hours and all that, you don't think nothing of it, you're living life. But did you know you gave up like $5,000 to $10,000 that you could have put in the stock market, and 3 or 4 years goes by, that $5,000 could now be $20,000 and you wouldn't have had to do anything, let it work on its own? That's what you're giving up when you're out here throwing money down the tubes and wasting it on things such as cars, homes, and all this other crap. Because I'm going to show you something right here. This right here, Fortune magazine. This is no joke. This is why the propaganda in America, when you go to school, get a job, buy a house, get a car, have a picket fence and 2.5 kids, all that is propaganda, because the top 10% of the wealthiest own so much, like the companies, like the corporations that you work for. So they need workers. Look at this right here on the screen. I left it up here so hopefully you were reading it. The rich own stocks. The middle class own homes. Do you understand? A home is not liquid. So even though, and you're at risk. So even though you buy a house, and I'll use a perfect example, Austin, Texas right now. If you would have bought a house last year for $400,000 or $500,000, it could be worth $700,000 right now. So those people are going, we're happy. House goes up 200 grand. So what? Every house is now 700 grand or more. So now when I sell that house, even though I have profit in it, in order to live in that same city, I now have to equal that. The home prices are going to be the same. So I really didn't make any money unless I sell it, keep the money, and move to a lower cost area. So this is why you're caught up versus if you were in the stock market and that same thing occurred, not only would you not have to go, I have to get rid of my house, but you're sitting there going, I actually have $200,000 positive, and that money could be in my hands in 24 to 48 hours if I want it to be. Unlike a home, you can't sell your house in 24 to 48 hours. That's the bottom line to this story. You're not liquid. So now I can go sell stocks. I can borrow against my stocks, just like I can borrow against a home. Except now when I'm paying $500, $700, $1,000, $1,500, $2,000 for a mortgage, I'm putting it into stocks. And stocks go up in value at a higher rate than a home does over the course of 10, 15 years. So we're going to talk about this today because I just wanted to point this out to you because I made a video about wealth inequality and the gap and the reason why. And this is one of the reasons why. Because you're sitting there taking out these loans and saying, hey, I don't mind paying a car note for $450, $500 a month. That could be investment money. I don't mind paying $2,000, $1,500, $1,100 for a house. That could be investment money. Think about it. So I just want to get your mind right. You got to start changing up because look here. This is New York Times. I'm going to have a link down below to all these articles so you can read them yourself. A whopping 84% of all stocks owned by Americans belong to the wealthiest 10% of the households. And look here. That includes everyone's stakes in the pension plans, the 401k, individual retirement accounts. So you're sitting there going, well, I got money in the retirement fund, 401k. That's lovely. No problem with that because a lot of people, after they retire, they have a pension, they get 401k money, they're happy. Other people, top 10%ers, they've always had their money in the stock market. This is why the stock market is important to certain people. Those in power, because they can manipulate the stock market. When they give tax cuts like in 2018, which this article, by the way, is from 2018. When you give tax cuts, that means the lower class, the middle class, you and I are paying our taxes. Meanwhile, the tax cut means the guys who make the most money, these top 10%ers, they pay less in taxes than we do. And you're signing off on this BS, acting like that's the way it's supposed to be. That's not how it's supposed to be. If they're giving them tax cuts, how come they're not giving middle class people tax cuts? You know why? Because 10% of the wealthiest own 84% of the stock market in 2018. So when they gave a tax cut, what do you think happened? More money went in the hands of the rich, taken right from your behinds. Y'all out here working 12, 14 hours a day, and the rich are getting tax write-offs just because they woke up today and their friends in Congress make it happen. What do you think happened? You know what happened? 2018, then 2019, when they got the tax cuts, all that free money went up to them. And of course, you know what they did. They bought more shares of stock. And this is what happens, right? Rising stock market doesn't lift all income earners. That's right. When are you guys going to wake up to this? 1% of the richest Americans own 50% of the stock market. Okay? We're going to look through this. I'm going to have the links down below so you guys can actually go through this yourself. And what's even more disturbing, check this out. This is in 2020, ladies and gentlemen. The Fed also determined 92% of the stocks owned in the U.S. are held by whites, followed by the other, which is 4.4% Hispanic and 1.9% African Americans. Do you hear me, minorities? You better get your stock game up. Why do you think they're messing around giving these tax cuts, tax breaks, and all this other crap while you sitting around working your behind 8, 12, 14 hours a day just so you can give taxes? Remember that FICA that comes out of your taxes every month? You got no control over it. Who do you think that money's going to? People, come on. You're going to have to wake up now and get on board. So that's why I'm here. I'm here to talk about it. Why? Because I can. They've tried to silence me in the past, but you know, that's what it is. But you can see the numbers don't lie. If you're a minority in this country, they didn't include the Asians in this. for this sake right here. But as you can see, 92% of the stock market is owned by whites. That tells you there's a disparity in the wealth gap. If only 6% of minorities, 7% of minorities are even in the stock market, when this stock market rises, who is it helping? Come on. You're going to have to wake up. All right? Everybody needs to be in the stock market. And I always say one thing. Wherever all the white people are making the money, you better carry your ass right there with them. There ain't no, I don't know, I can't study, maybe I need to look it up, maybe all that BS. Come on. It's real out here in the field. Economic is power. Economics is power. If you have no money, you have no power. When you're going to wake up thinking that you have a job and you think, oh yeah, that's all I need to do, you better wake the hell up. Because you're getting passed by. They're making this even easier for you, and you still ain't going to do nothing. How easy is it? You got YouTubes, you got internet, you got things you can study, you got people telling you what to buy. And you're still sitting there, well, I don't know if I can get off this $20. But yet I'm going to go out here and party. I'm going to go buy a car. I got to get my credit right so I can go buy a freaking $50,000 car so I can look cool. Come on, man. Get down with the program. All right, let's talk about something, because there's a lot of people who sit around and they say, hey, you know what, Eric, I don't know nothing about stocks. I'm not good with numbers. I don't understand it. It makes no sense. Kind of like what I tell people when they tell me they do options. To me, it makes no sense, but I understand that. So there's companies called like Wealthfront and Betterment. And all you have to do with Wealthfront, there's a link down below. As long as you deposit $500 or more, they actually manage your portfolio for you. All you have to do is pick something like, I'll take the risky approach, I'll take the medium risk approach, I'll take the value or the growth approach, and then they'll buy stock for you, and all you have to do is deposit money in there. And that is the trick, ladies and gentlemen. If you can deposit $500 a month, $20 a month, it does not matter whatever the amount is, as long as you can invest in something that you feel comfortable with in the stock market. Well, here, Wealthfront, they help you out. Like I said, there's a link down below, and you just need 500 or more. It's electronic. It's like a bot. They do it for you. You don't have to allocate. You don't have to go in and look at anything. You don't have to do anything. They handle it for you. All you have to do is send up some money well, you don't even have to send money. You can do $500 deposit and go set it and go on it with your life. They do the trade for you. They put everything where they allocate the money towards certain funds or certain stocks, and you can go on about your business. All right? And then hopefully you make money. They don't even charge you anything. You have to have over $5,000 in there before they charge you. So for all the newbies who don't feel like, hey, they're going to take some of my money away, they are not. As long as you don't have 5,000 or more in there, then it's free. They'll manage it for free. Okay? This is Wealthfront. Now, when you have cash in there, because there are dividends issued and things like that, then they do have a debit card that they're now issuing as well. So you can actually take out some money. You'll have a cash account on there as well. So this is one way that a person who doesn't feel comfortable with trying to pick out stocks like a Tesla and Apple, or, doesn't matter, Nordic American Tanker, DHT, all these other, you say, hey, I don't want to try and pick something. I feel like I don't want to lose. This is probably the best way to go. All right? They will not charge you anything until you get to $5,000. And then once you hit that, then you have to pay them like 0.25% as an expense ratio, something like that. But either way, it's worth it for somebody who just wants to do that. Okay? Nothing wrong with that. In fact, people who are seasoned investors do this. They just give it to a fund manager. Usually it's not electronic like a bot. It's actually a company, which we'll get into a little bit later. But let's get into some stocks, because if you missed the Friday Night Lives, man, people are dropping gems in the chat room. I don't know everything. Let's face facts. That's what the beauty of this community is. You have tons of people who are experienced, who have done many things in their life, and from their background, they have an insight, and they're looking at a different stock than what you would be looking at because their life is different. A melting pot. This is what makes things so powerful when you have a group of people. And on Friday, somebody, I believe it was Curtis Davis, mentioned Teledoc. Yes, T as in Tom, D as in David, OC for everybody on the podcast. Because LVGO, they merged with Teledoc. And LVGO, when they merged, was 130, 135, something like that per share. The two combined is $183 per share. Wouldn't it make some sense if you can buy some of that? Down below, Robinhood and Webull. Get your free share of stock, ladies and gentlemen. It's down below. Free share of stock. Pretty simple. Deposit $100 or more with Webull, and they give you 2 or 3 more free shares of stock right now until November 30th. They have a special promotion. Then what do? You share your link with family and friends so they get free shares of stock. Maybe 1 or 2 of them might say, you know what, let me put $20, $50, $100, $200, $500 a month and buy shares of stock because 10 years from now, I want to have $50,000 to $100,000 in my account. Come on. Anyhow, this is in the health industry. Many of you have heard me talk about this before. Let's just face facts. We're in a pandemic situation. How many people have been infected? 10, 11, 12, 13, 14 million just in the United States. Never mind the American citizens that live outside the United States and under quarantine and can't come back. Okay, let me calm down. Because the health industry, you now have a bunch of millions of people infected, which now means health industry. Just by that alone, you should be investing in the health industry. So Teledoc, I'm going with Curtis Davis. TDOC, we're in there. Now, many of you who are subscribers of the channel, who have become members, I leave messages down on what I buy from time to time. Amwell, okay, is another health stock. They came out IPO like 3 weeks ago. I told people to get in then. 3 weeks ago, 3 or 4 weeks ago, it was down. It wasn't this low. Like it says $2.95. It wasn't that. It was somewhere around $23. I think. Oh, this is at the end of the day. During the day, it was around 21 or something like that. That's what I bought it at. During the IPO, I told everybody, get your Amwell, American Well Corp. It's a health company as well. They're from 2006. Also, I'm bullish. Bull means bull run, bull up. That's what this means, right? I'm bullish on this. I'm holding this. I'm holding TDOC, for instance, right? I buy the stock. Here's the other tips. When you're talking about buying stocks, if you sell before 1 year, you owe, and it's a profit, you owe 25% in tax on that. If you sell after a year and you have profit, you only owe 15% of tax on your profit. Huge difference. That 10% could be thousands of dollars. So that's why when people are talking about I do day trading and I do all this other stuff that's before a year, keep in mind they owe 25% in tax when they're selling in a short period of time within a year. So keep those kind of things in mind. Don't be fooled. Run this out long term. Sit there and put some money in whenever you can. And with Robinhood, you can do fractional shares. What I mean is, if you didn't have $23.80 and you only had $10, you could buy $10 worth of American Well Corp, which is M as in Mary, W-L. $10 if you wanted to. If you wanted to just buy $100, you can say, okay, $100 for Amwell. So it just, you can tell it just to say reoccurring if you want to on these platforms and say, you know what, every 2 weeks, $50 of whatever shares you want to buy. You can break it down like that, fractional shares on Robinhood. And also you can do this on other platforms, whether it's Schwab, Fidelity, E-Trade. You can do different things on different platforms. Webull, they don't allow you to do fractional shares. So that's why I don't mention Webull, because they don't allow fractional shares at the moment. But trust me, they will. So anyhow, let's move on, shall we? Here we go. Workhorse. Workhorse Group. This right here is undercover. Look, this has been undervalued the whole time. They just now USPS contract. They're also into making cars, vans for GM. And look at this stock, $19.22. And what has GM done? These guys have come out with the new Hummer, electric vehicle Hummer. They're going to be coming out with vans also themselves. Ford's going to be coming out with vans to offset this Workhorse situation. So now you should be grabbing some of this future Workhorse, okay? Future WKHS, $19.22. This is for future, so you should sit back, relax after you buy it, and then think, should you buy some more? That's it. What are you afraid of? It's only money. You're making money every day, especially when you get these extra streams of income that we've been talking about. Dropbox, way undervalued. This is storage. I don't know how they're still $19. It's beyond me, okay? Because their competitors are all over in the hundreds and even $200 a share. So these guys are sitting here idly, and I'm sitting there going, this is unbelievable to me. So again, this is what I'm investing in. I'm giving you what I'm investing in. All right? And then let's not even talk about the next one because I got to talk about it. But let's look. When this thing came out, look at this. This thing came out like a year and a half ago. All this right here, that wasn't even the price. Oh, okay. This is 1 year. No wonder I can't get it. Okay, here we go. Year and a half ago, it came out at $6 again, $6.50, whatever it was. Close of day, it was at $9.90 or $10. Then intraday, the next day, it went up to $14. I made a video telling everybody sell because you done doubled your money, or sell a little bit more, take some profit, and leave your shares there. What happened over the course of this time? Look, it dropped down to $2.64. People were bailing. Nobody, listen, they just said, oh, I'm bullish on EV. It's electric vehicles, ladies and gentlemen. They were already well ahead of Tesla at this point. It's just that they weren't regional. They didn't have distribution, but they already had to set up a car, everything. Change of battery swaps, everything. So I said, just stay. And then March of this year, it was back around $3. Told people to buy some more. Get some more. Now look, we're up to $44.56. It's an EV company. And in fact, I bought some more on Friday. Yes, I bought some at $3. I bought some at $6. I bought some at $8. But the other day, last week, I bought some at $31. I'm still buying some. Why? Because this stock should be selling at $200, $300, $400, $500 a share. All right, what Elon Musk is to America, NEO is to China. They're helping them out too, just like America helped out Elon Musk and Tesla. Same kind of thing. What's up next? EV, Ford, coming out with their EV electric vehicles, vans, cars. And they scaled back, so now they done streamlined. So I always liked them. They used to give out dividends. They're saying they give out 7% on dividends again, but I haven't received any dividends from Ford since March or somewhere around there when the pandemic situation came out. But I'm still buying some because it's less than $10. Once they have these EVs online, which they already do, they're doing the Mustang, they're doing the step vans, and they have another vehicle coming out. Obviously, they're in play. And what you guys got to understand, they do autonomous driving, artificial intelligence. Quiet as it's kept, that's what they do. Also, that's why they're undervalued. So again, this is another long-term play that you get to grow with. And when they start issuing dividends again, not only do you get to grow back to that $25, $35 stock price it should be, now you get dividends as well. So again, welcome on board. Ford Motor Company, I bought some more last week. GM, I'm buying some this week. Why? GM Hummer just came out and it's an electric vehicle. And GM is giving dividends still. So here we are. So again, get your free shares of stock with the Robinhood and Webull app down below. All right? Now, let's move on to some other safe havens that people like. On the live stream, George Maple, this man, comes on and says, what about ARK investment ETFs? Ladies and gentlemen, I never heard of ARK Investments. So during the live stream, you can go watch it. It's the one that shows the get your free shares of stock. That's the thumbnail for it. Watch that. We're about probably an hour and a half in at least, maybe somewhere between an hour, hour and a half, and then I don't know where to point you for that. But anyhow, we go over some of this and look at it, and unbelievably, all of these ARK innovation, autonomous technology, next generation, genomic revolution, fintech, ETFs, remarkably, they have all earned 20% since inception or more. Now, granted, most stocks have went up in the last 5 6 years. No matter what, they've all went up. So it's kind of easy to win when Tesla, Apple, and Microsoft, Amazon, Google, and all these kind of companies are going up. It kind of makes it easy, right? Well, I don't know what to tell you, but 24, 25, 30% on your money or increase every year is incredible. For the last 3 4 years is incredible. We're going to get into it. The only thing I have to say about ARK is that they charge 0.75% expense, meaning that's what it costs you for them to manage the fund. And that's just kind of high, considering Vanguard is like 0.03%, 0.7, ladies and gentlemen, not 0.07, 0.7, which is almost 1%, versus 0.03, 0.10, 0.04. That's Vanguard group type stuff. But if they're earning 20, 25, 30% on your money, let's look at something. Here we go with ARKKQ. That's the autonomous technology and robotics. And simply because they have this autonomous technology and robotics, and the code is ARKKQ on the stock market on Robinhood Webull, I have to invest in this. I'll take the 0.75% hit because that's what's coming out, ladies and gentlemen. 3D printing, energy storage, space exploration, robotics, autonomous transportation. I'm in. You should be in as well. This is the new frontier, and you're getting in right now. So obviously that's where I want to be. I don't do stock investments like most people. I go by what's going to happen in the future, ladies and gentlemen. I want to invest in that right now because it's going to grow. And then my stock shares will grow. Meanwhile, I got in cheap. Okay? Can't win them all, though. Because like I said, I didn't think Tesla was going to happen, so I didn't invest in Tesla. I thought it was a joke, like I told you before. I was like, wait a minute, the government's giving these guys millions of dollars. They're broke. They never make money. What is this, year 10? They're still not making any money. What the hell? They still get tax incentives and tax breaks. What the freak? So I was like, nah, I ain't going to ever invest in it. Then all of a sudden, it shoots up, and now I invest in Tesla after the price when I could have bought it for $20 a share. Man, but you can't win them all, ladies and gentlemen. All you can do is win a few. And that's all you need, is just to win a few, like the Neo situation, right? A few. How many shares of stock at $3, and then now it's $40? That's a win, right? Did you invest in Amazon or Apple before? 4 or 5 years ago. Now you're winning. You know what I'm saying? So anyhow, ARKKQ, you can see right here, it's a 0.75%. But again, you can see right here all of what they do. So I'm going to wrap this up shortly. But here's another one that I like. It's the fintechs. Remember that video that I did on the fintechs? Here's another one. Down below, there'll be a link for $10. Get your free $10 at Coinbase. All right? Of Bitcoin. $10 worth of Bitcoin at Coinbase. There'll be a link down below. And fintech companies are financial companies, okay? Financial technology companies, that's what they are. And they're basically online, and they use the Ethereum network. That's why a month ago I told people to get Ethereum, okay? Because at that time it was only 340, 350, 300, whatever. And just like you can invest in Robinhood by a dollar value, that's what you can do with crypto. If you only have $50, if you have $500, if you have $1,000 you want to invest, that's the number. You just say, I want $1,000 worth of Bitcoin or $1,000 worth of Ethereum. That's what you do. You put in the dollar amount, and then it'll buy it for that value. Okay? So that's how you do it. And again, this is what they have to do with this, the fintechs. So just like I said, I buy in LEND, for instance. Some people bought YFI. These are the coins. YFI is a coin. LEND is a coin. Ether is a network. So I'm buying Ether. I'm buying LEND. I did not buy YFI because it was too late. My nephew told me about YFI. He calls me up and goes, hey man, what about YFI? You heard about it? It was $70 a share. Now it's like $13,000 a share. I was like, what? Why didn't you tell me when it was 70? Why are you calling me up now about this? But anyhow, That's the kind of thing that's happening over in the fintech industry while people are sleeping. But you're not sleeping because you're here at StopStrugglingNow.com. And that's what we talk about here. We try to get you in the game, and we get you in the right game where we have an upside, where you have to hold this for a year or 2 or 3, and therefore you pay less in taxes, and you have a potential to make a hell of a lot more money. All right, let's move along. Here's another index fund. So ARK funds are index type funds for the ARK, and they charge 0.75. Now I'm going to go to the Vanguard because a lot of people like Vanguard. So we're going to talk about V as in Victor, T as in Tom, I, which is the total stock market. And just to show you the difference here, look at this. Their expense is only 0.03%. So that gives you an idea, the big difference. 0.75 in this could be the difference of $2, $3, $5, $10,000 over the course of time that is taken out as an expense versus what you could have used to invest in the market. So here's the other thing. I'm going to show you right here the historical since 2010. If you put $10,000 in here, right? Here's how much it would be now. 33 times, 3 times your money. So start thinking about this. If you had 100,000, which, as you can see from the chart before, when I was telling you about the wealth inequality, the wealth gap, where you only had so many minorities invest in the stock market, but yet you had 92% of white people invest in the stock market. They're getting 3 times on their money. Only 1.9% of black people are getting 3 times their money, and only 4.4% of Hispanics are getting 3 times their money. Now you see why there's a large wealth gap. If 92% of somebody's getting 3 times their money versus 7% of the person getting 3 times their money, wealth gap's getting larger while you sleeping. Do you get it yet? Hopefully you guys are understanding what I'm saying, because you need to get on board. You're not going to lose money is what I'm trying to say. You don't think these 10%ers, they'll manipulate the market in order not to lose. Okay, let's get down to the next one. VITAX, and this one has a 0.10%. Again, ARK is 0.7. This is a low, still low, 0.10, because when you break it down, it's 0.0001. In reality, that's what 0.10% is. But they have a minimum investment of $100 to get in on, $100,000 to get in on this one, because this is the program. Look at this. 10,000 in 2010 would be 56,000 right now. And I forgot to show you something. You can see the top 10 stocks that the fund holds. And you can see, of course, the big names. That's, again, your top 10 percenters. I know you're a top 10 percenter. I know my 1 percenters. What are we going to invest in? We're not going to invest in these crummy companies. We're going to invest in companies that we know in the future. Apple, Microsoft, Nvidia, Visa, MasterCard, Adobe, Salesforce, PayPal, Intel, Cisco. This is all next level stuff coming out. These companies are on the forefront of stuff. So therefore, that's why they're going to put majority of the asset, 59% of the asset in here. This is what you should be doing. Oh, I'm sorry, ladies and gentlemen. Today I'm thinking a little differently because I've been preaching this for like 2 years. And there's a lot of people who didn't listen, sat on the sidelines, and they could grow their money. But it's not too late. You can always grow your money. Just download the Robinhood and Webull link. Deposit whatever you want, whatever you can afford to lose, as they say. I'm not a financial advisor. I'm just giving you guys some introspect into what you should think about if you're going to try and get in this game. And you should get in the game. You can see the numbers. Okay? So, again, if you're able, a person who put in 100,000, for instance, 10 years ago, now has $560,000 in their account. Okay? 10 years. That's a lifetime. People, how long does it take you to earn $500,000 working for somebody else? Come on. Come on, man. Now you see why the top 10 percenters stay top 10 percenters. Here goes the next one. VOO, and then we're out of here. Another Vanguard, and this one you can see 0.03%. And once again, we'll do the same thing. 10,000 in this one is now, again, 33. So, again, if you would have had $100,000 in here, and notice they don't have a minimum, you would now have $330,000 in your account after 10 years by doing nothing but putting your money there. 100, not even investing no more money like you should have. Not even putting in an extra, 10,000 over that time, or another 5,000 or 1,000 over that time. That's just if you would have left the 10,000 in there. And look here, once again, you'll see familiar names. Apple, Microsoft, Amazon, Alphabet, which is Google, G-O-O-G, Facebook, Berkshire Hathaway, Johnson & Johnson, Procter & Gamble, Nvidia, and Visa, which should mean, because some of these give out dividends, which means they also are probably giving out dividends on this. In fact, they do. I know they do. I just can't pull it up real quick. But let's see. No, I can't pull it. Well, okay, hold on. Let's go. Oh, wait. Here we go. Here we go. Let's see. Here we go. Here's the dividends. $1.30 September this year. $1.43 June of this year per share. All right? So there's your dividends, because some of those companies give out dividends. If you invest with those companies separately, you might have a higher dividend rate, which is why I suggest doing the first, some of the first ones that I mentioned. Some of the first ones I mentioned don't even give dividends. But if you want dividends, then look at, I always say the first, T as in Tom, AT&T. Second, what you're going to look at, PSEC right now, Prospect Capital. Third, GOOD. Why? Because they issue out dividends every month is good, PSEC, and AGNC. Also, all three of those, PSEC, GOOD, AGN as in Nancy, C as in Charles, dividends every month. And that gets you around, all of them combined is around 11 or 12% on your money over the course of a year. So there you go. You could be doing the same thing on a different level, doing dividend funds, but they're not really going to be growth potentially. But at least you know you're getting a check every month. Okay? Reinvest it, ladies and gentlemen. All right. So with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. So that's why I'm a little bit more tense today about it, because I realize there's a lot of people who's having a hard life. There's a whole bunch of people who are actually not really having a hard life, but living paycheck to paycheck, but they're not allocating their funds to where you can use your money to make money for you. But you're sitting there going, well, I'll go splurge this weekend and spend $50 on this, or $100 or $200 on this, because I can't really do anything, when you should have been thinking, well, wait a minute, that money I could have put over here and I could be earning $20 a year for the rest of my life. Wait a minute, I can put that money over here, and then that $200 is actually going to be $1,000 a few years from now, and I'm still getting $40 a year after I'm standing around doing nothing. So it escalates. Now you have 50, then you have 100. Next thing you know, you're like, I got $10,000 coming in every month. Plus my stock portfolio went up another 10,000. This is the kind of thing that happens, and this is what you have to start thinking about in this day and age, because fintech companies are here. You're going to be able to borrow against your assets, okay? Just like, well, let's just face facts. Top 10%ers can borrow against their brokerage, otherwise called margin accounts. You can borrow against that, okay? But you're not going to know that until you have hundreds of thousands of dollars in your account and you're doing margins. Then you find out, hey, wait, I can take money out of here? Yeah, you can borrow against that. We're just going to call if the stocks drop and it to below the margins, and we got to, ask you to put some money in. But if it doesn't drop, then here, you can have $100,000. Who cares? Follow what I'm saying, ladies and gentlemen? Things change. So, with all that said, keep your head up, keep moving, and I'm out.